Hello, and welcome to a new episode with your host, Vinney Chopra. I'm so excited to have you here as we dive deep into the world of real estate investing, syndications, abundance mindset, and building generational wealth. We are excited to be in the top 1.5% of the real estate podcasts. Got number 11 actually out of top 50 real estate syndication podcasts. Thanks to you. Each episode, we bring powerful insights, expert guests, and actionable strategies to help you take your investing game to the next level. Whether you are a seasoned investor or just getting started, if you love what you hear, please take a moment to subscribe, leave a 5-star review, and follow me on social media so that we can never miss an episode. Your support helps us continue sharing valuable content with more people like you. Now let's jump into today's episode. Thank you. Hey guys, Vinney Chopra here. You know what? Back at you again. Thank you for making our podcast, Apartment Syndication Made Easy, number 1, number 11, out of top 50, top 90. It's fabulous. I know another post came with some other group and they said, Vinney, you are at number, even higher than that. But thank you so much. I've got a great friend, Nic Mcgrue is in the house. If you could just Google Nic Mcgrue, SEC attorney, Polymath Capital, you'll come to that. And we have done many syndications together, Nic.
Yes.
Maybe nine or 11, maybe I'm thinking.
Quite a bit, yeah.
Yeah, welcome.
Hey, good to be with you as always, Vinney. I always love it. Vinney, smile that you live up to your name always. And I'm someone who smiles a lot too, so I can appreciate it.
I love that. Both of us are just smiling buddies. Let's just talk about, I know the multifamily has gone a little bit sideways and because of the interest rates hikes and insurance cost and property taxes, all those things. And SEC rules have not really altered that much, but I thought it would be good to talk about syndication, fund structure, fund of a fund, things like that.
Yeah, definitely. The exempt securities market, especially in the multifamily space, definitely is much slower than it was 2 or 3 years ago. It's a lot. You've got to be a much more skilled operator. A few years ago, the market would save you even if you weren't that great. Now you've got to go in with good assumptions and then work your behind off to make sure you meet them. Because again, it's still doable and people are still making money, but it's not just being handed to you like it was 2 or 3 years ago.
So true. Let me ask you a question. Any changes that the SEC has made lately, like in 24, 25? I know with the accredited investors, a lot more money is raised with accredited investors. Almost how many? 34 million, I think, accredited investors in USA alone. And then, of course, the retirement funds are way up there, 36 trillion almost.
Yeah, so far I haven't seen a whole lot of change. I know a couple years ago, the SEC, and a lot of people got scared because they didn't read the end. The SEC put out like a 120-page thing that said, we're thinking about changing the definition of accredited investors. This definition came out in like the 80s. And in the 80s, $200,000 was like a lot of money. Now, $200,000 is still definitely a good amount of money, but a lot of people with just regular type jobs can get that much or close to it. And so in that notice, they were saying, yeah, we're thinking about maybe changing this because it hasn't been adjusted for inflation. And before, there's not many people that made $200,000 or $300,000. Now there's a good amount of people that do. And so they were talking about changing it. And so I remember when that came out, a lot of people were like, I just got accredited. Now they're going to make it higher. What's going on? That's not fair. And I said, calm down. It was crazy. They did this whole thing going through the history, talking about what they're thinking about, that they might want to change it. And then at the end, they're like, so that's our thoughts. You tell us your thoughts. And so they're basically saying, hey, here's what we're thinking about, but let us know what your thoughts are. But they weren't saying they're going to change it. And I haven't seen any traction on that. And interestingly enough, around that same time, shortly after, I believe it was the House in Congress actually passed something that essentially said that you could take an exam to be accredited. So you had, on one hand, the SEC saying, oh, we're thinking about maybe making it more difficult, increasing the income. And then on the other hand, you had the House saying, we're actually thinking maybe we just do a test. Neither of those have gotten a whole lot of traction. I do the House method of a test because if we think about why
Yeah.
at least for the most part, why they have the distinction of accredited investor versus non, is that they're essentially saying we don't want people investing in things and losing money that they don't have the ability to lose. Whereas if you have a test that can check how financially savvy you are, it's your money. If you're going to make bad investments informed and knowingly, that's your prerogative to do, is my position. Obviously, I don't want people making bad investments.
No,
I hope you're not
totally.
investing, regardless of how savvy you are. I hope you're not investing dollars that you can't afford to lose. But I think a test goes more towards achieving the goal of making sure we're not having people make uninformed investments, because I know lots of very wealthy people that are maybe not the most financially savvy.
Totally. So true.
I think having testing to see, do they actually understand the risks involved and understand how to vet these things? I think that's a better barometer versus just you had a job or maybe you made one investment that randomly panned out and now you're accredited, but not necessarily educated enough to protect yourself. Whereas a test to make sure that, you have the education and knowledge to protect yourself.
Hi friends, this is Vinney Chopra from here in Danville, California. And you might be saying, hey Vinney, what are these over here? I wrote this book a few years back. Apartment Syndication Made Easy. It became top seller. I came from India with $7 in my pocket. It says 500 million. It's going to be 1 billion very soon, very soon. I'm right at about 850, 900 million. And then I'm ready for the next billion. Actually, you will see that happening, 2 billion in this book also. The other book I wrote, which has been a very big positivity, has been my life. Always, I've been married 43 years with 2 children, and the beauty is to be positive, the mindset that can take you to all the places in the world. And that's the book that also became big seller. My third book, Senior Assisted Living, is coming. So do yourself a favor. Go ahead and click the link below to get free copies, audio copies of these books, even printed copies of these books. Printed means digital if you can't afford it. But I would highly recommend for you to get these or go to Amazon.com. Just go to Amazon. I got it in soft cover, in hardcover, in Kindle, in audio, also the Spanish version of this book also. So let's crush it, guys. I know you can be successful. I know you can do the kind of things that you want to do in life and have the streams of income and know how to really, educate yourself so that you could become a strong force in this world in real estate. I know you can. So take that step. Don't just be on the sideline. Take charge of your life. Take charge of your education.
And there's so much information to really educate yourself through AI, through all these videos,
AI is
and
a whole
others,
new ball game.
all those things. Yeah, everything is so important. The big thing I see, Nic, also is that, I don't think my daughter is coming in there. Yeah, so true. But I think, like stock market, nobody has to take a test. They just get and they lose money overnight sometime. Bad investments happen. So that sophisticated investors, if they are not or precluded, not involved into good syndications, they lose out. That's the other side of it. Only accredited investors, wealthy people with high net worth get those great returns, which savvy syndicators and fund managers are able to do. That's right.
I hadn't even mentioned that. That's a great point. Because if we make it to where only wealthy people can invest in these deals that are giving you 15-20%, and if you're not wealthy, you can invest in the stock market and get 7%. That we're just making that gap higher. Whereas I think a test could give the protection while also, like you said, allowing those people that may not be as high of income earners or high of net worth, but they understand what they're doing. It allows them to get into investments that have the potential for much better returns as well.
Much better, yes. Any other big tips you would like to say to some new investors, new syndicators, what to watch out?
For new operators, new syndicators, I'd say really have a good relationship with your lender and talk with them regularly, particularly in this market cycle. One thing that I'm seeing a lot is that we're having rates expire or rate locks end, or even sometimes the actual debt itself. A lot of times these deals, it's 3 to 7 years of debt and usually 5 years. And so we're seeing a lot of that debt expire. And so having a good relationship with your lender, one, can help it to where when that's expiring, you're already negotiating what these new terms are. Another thing, having that relationship can help you when there are tough times, or even maybe not the toughest times. Because one thing that I have seen that's unfortunate, and this is somewhat speculation as to the reason why, but I've seen a lot of lenders, not a lot, more than you would expect, putting operators in technical default, saying you're paying your monthly payment, but you're supposed to paint the garage doors and you haven't painted them yet, so you're in default. Or we expect $500,000 in reserves and you've got 450, so you're in default. Things to where it's okay, yeah, technically we are maybe not be following exactly to a T what our contract says, but you're still getting your money every month, lender, and the asset's doing fine. But my speculation is that they're saying, you know what, I lent this money out at 3 or 4%, whereas if I make them refinance, or if I get this money back, I can lend it out at 7 or 8% today's rates. So I'm seeing a lot of situations where people are actually being able to pay their monthly payments and still having the lender come at them for default and have a lockbox on it. Sometimes they're doing receiverships or offers for cash for keys, various things like that. Again, when we have an asset that actually is operating and is fairly healthy, just a few things are a little tough because everything in this market is tough right now. But lenders are, in my opinion, sometimes taking advantage of that. So I'd say have good relationships with both your lender and also other lenders, so that way if you do find yourself in a bind, whether it's a traditional lender or maybe a fund that can be rescue capital, just so you have options. Because I still think syndication is a great way to build wealth, a great way to allow other people to build wealth as well. But the market cycle we're in makes it a little bit more difficult than it was 5 years ago.
So true. Hey guys, you heard that. That's from the specialist, Nic Mcgrue, my good friend. How can people reach you, Nic?
Yeah, would definitely love to reach out or hear from all your people. So you can find me on social media. It's at Nic the Lawyer, NIC the Lawyer. Or you can also go to the website. It's Polymath Legal. So www.polymathlegal.com. So polymathlegal.com. Whether you find me on socials or on the website, reach out. If you go to the website, it has our phone number. You can message us directly and you can schedule directly. If you go on the socials, email me or DM me and I'll DM you back.
Oh, wonderful. Nic, thank you so much for coming on the show. I really appreciate that.
Thanks
Good
for
luck
having
to
me. As
you.
always, happy to be back whenever you give the call.
Oh, thank you so much. Take care and we'll see you again.
All right.
Thank you, Nic. Thank you so much.
Dear friends, this is Vinney Chopra. I am so glad you're listening to the episode. Thanks so much. Really appreciate that. Please share it with others who can really benefit also. Can I ask you a favor? Just a small favor. Less than a minute, if you could give 5-star reviews on iTunes or Stitcher, that'll go a long way. We are one of the top podcasts in real estate now in the nation, but it will really help a lot if you gave 5-star reviews, and we'll bring a lot more great content for you. Thank you so much. Appreciate that, and see you in the next episode. God bless you. Bye-bye. Wow, what an incredible conversation today. I hope you got tons of value from this episode. If you did, don't forget to subscribe, leave a 5-star review, and follow me on social media to stay updated on all the things real estate, investing, abundance mindset, and wealth creation. If you're an accredited investor looking for exclusive investment opportunities, be sure to join our elite Monil Investors Club at vinneychopra.com/invest, where we share details of our future projects. Quick disclaimer, we are not selling any securities, and this podcast is strictly for educational and information purposes only. The opinions shared by our guests are their own and should not be considered financial or investment advice. Always do your own due diligence and consult with a financial professional before making any investment decisions. Thank you again for tuning in. Until next time, keep smiling, keep investing, and keep making a massive impact. God bless you.
Be sure to listen to Mr. Smiles next week with more golden nuggets and top-notch coaching tips. You can reach him by going to VinneyChopra.com. Be sure to like, comment, and share to show everyone how Mr. Smiles has brought your apartment syndication business to the next level.